Welcome to the Daily Update Podcast, where I'll go over the action in the market for Tuesday, August 19th, and we'll see how things look for Wednesday, August 20th. Going over a recap of what happened on Tuesday, it was a mixed day on Wall Street, with the major indexes showing varied performance. The S&P 500 closed lower, continuing a cautious trend, while the Nasdaq and Nasdaq 100 also declined, reflecting weakness in growth stocks. Meanwhile, the Dow touched an intraday all-time high but ended the session only slightly positive, helped by strength in value-oriented stocks. The market's defensive shift was evident as growth stocks underperformed their value counterparts across large, mid, and small-cap segments. This rotation suggests investors are bracing for potential volatility, particularly ahead of Fed Reserve Chair Powell's speech on Friday, August 22nd. Looking at the price action, the S&P 500 opened lower, saw some early dip buying, but weakened after midday, breaching key support levels at S1, which was at 64.39, S2 at 64.30, and closing just below S3 at 64.12, near the psychological 6400 level, which did hold as support. Trading volume continues to be below average as we endure the summer months. Looking at our technical indicators, despite Tuesday's decline, the S&P 500 remains above its 20-period moving average. This level has held every day since last May, except for a brief dip on August 1st. Momentum indicators, such as stochastics, are showing signs of weakening, but moving averages show that the S&P is still positive across the short, intermediate, and long-term timeframes. The VIX did tick up into the mid-15s, signaling a potential of increased market volatility in the near term, while sector performance further underscored the defensive shift, with real estate, staples, utilities, and healthcare outperforming, while tech, discretionary, and communication services lagged. Notably, mega-cap stocks including Nvidia, which was down 3.5%, and Netflix, down 2.5%, experienced profit-taking but held above key moving averages. On the economic front, Tuesday's data provided mixed signals. Housing starts rose 5.2% month over month, and the annualized rate surpassed expectations. However, building permits fell 2.8% and missed forecasts, signaling potential softening in future construction activity. Inflation now remains a persistent concern, keeping inflation around 3%, above the Fed's 2% target. On Tuesday, interest rates eased slightly with the 10-year yield at 4.3%. The U.S. dollar is back above its 50-day moving average, but still is in a downtrend. These dynamics suggest a cautious market. Looking ahead to Wednesday, August 20th, the market's focus will be on the release of the FOMC meeting minutes at 2 p.m. Eastern Time. This could provide critical clues about Fed policy direction. Also released will be the MBA Mortgage Applications Index, and a number of retail companies will be reporting earnings. Seasonally, the S&P 500 tends to be neutral to negative for August 20th, while the Dow leans neutral to positive. However, post-election year weakness could persist if it continues into September and October. Technically, we'll be keeping an eye on the 20-period moving average, which is already being tested by the QQQs, which represent the Nasdaq 100. The S&P now carries a negative bias following Tuesday's decline, but positive momentum suggests any pullback may be limited unless further confirmation of a defensive shift emerges. In conclusion, the S&P 500 remains positive across all time frames, but is showing signs of fatigue, struggling to break above the 64.68 resistance level. The Nasdaq and Nasdaq 100 face similar overhead resistance on their daily charts, while the market ignores largely geopolitical developments such as Russia-Ukraine peace talks and any potential trade deals or tariff updates. This is likely to continue until any concrete outcomes materialize. All eyes are looking to Jerome Powell's Jackson Hole speech this Friday. Investors still recall his hawkish comments in 2022, which triggered an even deeper bear market, and they're positioning defensively in anticipation. Key levels to watch include the S&P 500 6400 level and the 20-period moving average for potential support or a breakdown. I hope you found this podcast helpful. For more in-depth analysis and commentary, The full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.